This is Matthew Cratter from Trader University, and today I want to talk about how to pick the best cryptocurrency to invest in. People are always coming to me asking me, do you like this coin? Do you like that coin? So I wanted to give you guys sort of the list of steps that I go through when I'm thinking about new coins or altcoins. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit the subscribe button. So the first thing we'll start with is just the hash rate. And hash rate is just a measurement of how much computing power is being contributed by miners on the network. You can think of the network as sort of like a supercomputer, and the hash rate is sort of a measurement of the computing power of the supercomputer, which is just all the miners and nodes connected to the network. So there are different hash rates, and we'll just go over the terminology really briefly. 1 kilo hash is 1,000 hashes or calculations per second. We have a mega hash, which is 1,000,000 per second. Giga hash, which is 1,000,000,000 hashes per second. Terahash, these numbers are going to come in useful, as you'll see in a moment. Terahash is 1,000,000,000,000 hashes per second. Petahash is 1,000,000,000,000, and then exahash, which is where we'll stop, is 1,000,000,000,000 hashes per second. Now, the first thing I do when I'm looking at a cryptocurrency is I take a look at the hash rate if it's a proof of work currency. So for example, Litecoin, someone just asked me about Litecoin. If we take a look at the hash rate chart, so this is a historical chart, goes back to, call it 2015 or so. And what we can see is that the computing power on the network has been sort of cyclical. It goes up, it goes down. It doesn't seem to be going any direction in particular. It has gone up, obviously, since 2017 levels, but we don't see it really trending up. And what this means is that there's sort of variable demand on the network for this hash rate, or you can think of it also as variable external demand for this coin. One thing I should say is that the higher the hash rate of a coin or a network, the more secure it is, just because there are more computers and more computing power securing the network. So Litecoin I would reject just on the basis of this hash chart. Dogecoin, which has always been a bit of a joke, but it's on here, same, looks very similar, sort of these cycles of hashing power. Feathercoin, which I never heard of before, looks just terrible, giant spike in 2014, and then it's been sort of grinding along the bottom since then. This is not the sign of a secure network. We can see that's also down at giga hashes, whereas Litecoin is up at terahashes. So that was Feathercoin, and then we'll look at two forks of Bitcoin. Bitcoin Cash, which is BCH. We can see here that the hash rate, 2.8 exahash per second, has been fairly constant, has not been growing. This I view as a bad sign, and I believe that Bitcoin Cash and BSV, which we'll look at next, are really failed forks of the real Bitcoin, which is BTC. Here's BSV, similar hash rate chart, not really trending anywhere. Looks like it went to sort of a higher plateau here, but then it came right back down. And you're going to see how these hash rate charts compare to what we're coming to. Namecoin. Now, Namecoin seems to have a very good, this is more what I want to see a hash rate look like, where it's already at a high level, exahashes, and it's also trending upwards. We can flip to log and see it in log. Sometimes that makes it a little easier to view. But this is what I like to see. It's just like with a stock. You want to see the hash rate going from the bottom left side of the page up to the right side of the page. So Namecoin is looking promising just based on its hash rate. It's exahashes, it's not terahashes, so it's not quite at that. Actually, that is a good level. So then the next thing I would do once I find the hash rate, and the hash rate looks like there's increasing demand over time, is I'll just quickly Google what is the market cap, which is the sort of the current circulating, the total value of all the coins. And we find that Namecoin has a market cap of just 6.8 million. This is far, far too low, especially for a coin that's been around for many years, almost 4 years it looks like. And so when you have a market cap that's just 6.8 million, this sounds like a lot of money. It is a lot of money for an individual, But for any institutional investor, for really anyone to get involved, if you wanted to put in 500, 600K in this, you would be already 10% of the market cap. And so that makes it very difficult. And it doesn't matter really whether Namecoin has this amazing technology. I don't know anything about Namecoin. But the fact that it's been around for this long, still has such a small market cap, would lead me to cross it off the list just for that reason. We need products not just to be good, but we need market demand for them. And one measurement of market demand is the market cap of a coin. Next, we move on to Zcash. Zcash seems to have a good upward sloping hash rate. It's a little bit lower. It's at 5.99 gigahashes. And so it's actually quite a bit below where we'd like to see exahash, which means that it's not quite as secure as, or not nearly as secure as some of the higher hash rate coins. If we Google Zcash market cap, almost 800 million, which is certainly an improvement over Namecoin. This does have potential, but the fact that it's been around this long and still has a fairly low hash rate just means that there are not as many miners interested in it. The network is not as secure. And again, this is a fairly small market cap. Anything below $1 billion is still quite small, especially if you're expecting institutional investors to get involved. So that would be Zcash. Maybe something to look a little bit more into at some point. But the fact that it's been around forever and or been around for at least 3 years, still has a small market cap, would lead me to disqualify it. The problem is there are only so many hours in the day, and it's very easy to go down these rabbit holes on coins. And so I'm trying to come up with criteria that will allow me to quickly cross coins off my list to save time. This is very similar to how you do stock selection. So that would be Zcash. Possibly deserves a little bit more research. Here's Monero, well known as sort of the privacy coin. 1.6 gigahashes. Again, not the most secure network. It looks like we've had a big spike in the last 24 hours, up 18%, but also not the greatest chart. It seems that it's been sort of dead in the water, the hash rate, since the beginning of 2020. Monero market cap 1.6 billion, so it does qualify on the basis of that. Not too bad. At 1.6 billion, you can get sort of bigger investors beginning to be involved. So then the next thing I would check, because I'm sort of a hard money guy, I'm interested in coins that have a fixed supply. The next thing I would do is check to see whether there's a maximum cap. And Monero looks like there's not. Once it reaches 18.3 million money supply Monero coins, then the money supply will stay fixed. You'll still be issuing, the miners will still be issuing more Monero, just 0.3 Monero per minute. And so this does not have a fixed market cap. And so it's not as scarce as something, it doesn't have a fixed max supply of coins. And so for me, it's not as interesting as something like Bitcoin, which we know has only 21 million coins. So hash rate looks good on Monero. Market cap looks decent. But the fact that they're going to keep printing coins, I've also heard with Monero that because it's a private coin, it can be a little difficult to verify the supply. So that's another problem that needs to be looked into, which I may do. I may do at some point. But this is another one of those coins that doesn't seem to have really taken off as quickly as we would hope. Next, Ethereum, which I still need to do some videos on. I've sort of neglected Ethereum. It deserves to be taken seriously simply because it has the second largest market cap of all the coins. Here's the chart of the hash rate. Again, not that impressive. It's not really up and to the right. It looks like it's been sort of dead in the water as a hash rate since January 2019. It is at the terahash level, so quite secure. Really second only to, I would say, actually it's quite a lot less secure than Bitcoin. I'm sorry, I'm still learning these prefixes, but yeah, terahash would be down here. Exahash, where Bitcoin is, will be up here as we see. So hash rate's not bad, but again, it's at a lower level. The other problem with Ethereum is there's been a recent scandal where someone, Pierre Rochard, who's a Bitcoin Twitter guy, asked Ethereum to verify the total supply of coins. And it turns out that everyone came up with different numbers. There wasn't really functionality to do this. And this is what we'd expect from a currency that's issued by a centralized authority, a centralized authority as Ethereum is. And there's still a lot of debates. I haven't followed all the ins and outs here, but it would seem that calculating the total ETH supply is actually fairly difficult. This is a big red flag to me. Maybe Ethereum's useful for other things, but as a hard form of money that has a fixed supply, this is very worrisome. The fact also that the network is less secure than Bitcoin. We're just at the terahash level for Ethereum, and as we'll see, I believe Bitcoin is at the exahash territory. Yes, it is 132 exahash. So this is the Bitcoin BTC hash rate chart. We can see it's up and to the right, and it's recently been hitting new highs. If we look at the log chart, it becomes very clear. So this Bitcoin not only has the highest hash rate of any of these coins, but it's also been trending up and to the right. This is the most secure network. If you want to store wealth, it makes sense to pick why store your wealth in a paper bag when you could store it in Fort Knox would be sort of the analogy. The higher the hash rate, the more computing power securing the network. As well, Bitcoin, we know exactly what the money supply is, how many coins are out there, 18.469 million and a 21 million cap. It's very easy to verify as well. Anyone who has a full node can just run a bit of code and it will verify what the money supply is. Bitcoin is also not centralized like Ethereum. There's no Vitalik Buterin for Bitcoin. There's obviously Satoshi Nakamoto, who disappeared many years ago and has never been heard from. He may no longer be alive, etc. But there's not that central point of failure that you have when you have a charismatic leader like a Buterin, like a Vitalik, who could be, he could be captured by a government. Someone could twist his arm or bribe him, etc. So that makes it a lot less decentralized, in my opinion, combined with the fact that Ethereum doesn't seem to have a max supply and people can't even verify what the total supply is. Now, maybe Ethereum's trying to be something else than hard money. This is something I still need to investigate. But as it seems to lack in security. Its hash rate is much lower than Bitcoin, and its supply is impossible, at least at this point, to verify, or at least very, very difficult to verify. So that leads us to the 4 steps. High and increasing hash rate. This means there's more interest in the currency, there are more miners, there's more computing power securing the network. If you're an institutional investor, if you're someone with a lot of money, you're not going to put your money into something that has a weak hash rate, where the network is not being secured with as much power. And here's where I believe in proof of work more than proof of stake. Proof of stake is where you put up some coins, and I think proof of work, because it's so energy intensive, is more secure. That's again another topic for another video to go into. If you're looking at hash rate charts, these are all proof of work. Proof of stake, as I understand it, will not have a hash rate chart. Next is market cap. Is it big enough for institutional investors? Now, you could argue you want to invest in the small cap, micro cap version of what's going to be a big success. The problem is that Bitcoin has such a great lead, and market cap has to be big enough at a certain point to get institutional investors excited about it. Bitcoin right now has a market cap of 217, almost 218 billion. This is still fairly small for institutional investors, but it's much larger, as a larger market cap than any other coin out there. It also has the very strong branding as well. Everyone knows what Bitcoin is, whereas people might not know about Feather coin or something like that. So high hash rate, secure network, market cap that's, if it's not large already, hopefully it's increasing rapidly. It needs to get big enough for institutions eventually to be able to participate, because that's what really drives huge returns. If you're interested in cryptocurrency as a store of value, as a fixed asset that will go up when the Fed prints a lot of money, you definitely want to check on the supply dynamics. Something like XRP, for example, Ripple XRP, They say it has a max supply. Its max supply is very high, 100 billion coins, 100 billion XRP, but it's run by a centralized company which can just change the software code and print more coins. So this is always something to look into. And then also something to investigate is the centralization of it. Ethereum's very centralized. We obviously have a charismatic founder who's still very involved and can make decisions about its future. That's what I mean by centralization. XRP, Ripple XRP, is very centralized. And the problem with centralization is the max supply may not be capped. Another thing to watch out for with cryptocurrencies that are run by foundations or run by corporations is pre-mines. Have the insiders pre-mined a bunch of coins before its release and set it aside for themselves so they can then dump on retail investors. This is what happened with XRP, where the founders gave themselves a lot of coins and now they're slowly selling them to naive retail investors. This is not true for Bitcoin. Now, Satoshi Nakamoto did, it wasn't really a pre-mine. He mined 1 million coins. These coins have never been moved and they've never been sold. And so theoretically, at least, there's not an overhang there. That's something you have to decide for yourself. But I think on all of these criteria, Bitcoin definitely comes out on top as having the most secure network as measured by hash rate. It's got a fixed max supply. It's decentralized. It's not issued by a corporation. And it's got the largest market cap, which makes it available for institutional investors. We're already beginning to see big hedge fund guys like Paul Tudor Jones, companies like MicroStrategy making allocations to Bitcoin. They're not buying XRP, they're not buying Feathercoin or Litecoin or even Ethereum. If you found this video helpful, be sure to hit that subscribe and like button and hit that notification bell so you'll be notified when my next video comes out. And let me know your questions and comments in the comment section below. I'm obviously interested in learning if I've gotten any of this wrong. This is something I've been thinking a lot about, and I want to make sure that I'm allocated to the best cryptos going forward over the next 10 or 20 years. Right now, the only one I'm invested in is Bitcoin, BTC, but I am open to suggestions. If you give me a suggestion of something that's very tiny, though, something like Namecoin that has a very small market cap of 6.8 million, it's probably not worth the time to investigate. There are literally thousands of coins like this. And so I'm trying to come up with criteria so that I don't miss something, but also that I don't waste my time going down infinite rabbit holes. And I encourage all of you to come up with your own criteria for how to pick the best cryptocurrency. Thanks a lot for listening, and I'll see you in the next video.